Your wealth deserves stability, expertise, security. Your wealth deserves LGT Crestone, private wealth with over a century of global heritage.
G'day and welcome to the Global View on this Thursday. Well, let's take a look at what is making news with US private payrolls rising by 324,000 jobs last month, well above the 189,000 that economists had forecast. The ADP National Employment report showed there were 1.6 job openings for every unemployed American in June, which was little change from the previous month. Long-term US Treasury yields gained on the release of employment data, with the yield on the 10-year note reaching its highest level since November at 4.12%. Little change in the two-year yield at 4.93%. And Goldman Sachs has said it does not believe there are any meaningful holders of Treasuries who will be forced to sell because of the US credit rating downgrade. Most major brokerages are not expecting the move by ratings agency Fitch to be sustained drag on US financial markets, pointing to an economy that is stronger now than in 2011, when the S&P Global downgraded US sovereign debt. Well, just to reiterate there, US Treasury Secretary Janet Yellen has strongly opposed Fitch Ratings' recent downgrade, stating that it's entirely unwarranted as it overlooked improvements in governance metrics during the Biden administration and the country's economic strength. Yellen going on to say the ratings agency announcement on Tuesday failed to take into account a resilient US economy with low unemployment, falling inflation, continued growth and strong innovation. Going on to say Fitch's decision is puzzling in the light of economic strength we see in the US. I strongly disagree with Fitch's decision and I believe it is entirely unwarranted. And she in fact accused Fitch of basing their assessment on outdated data and failing to reflect improvements in US governance indicators. Well, let's get some reaction to what we saw there and more broadly what is going on with the US economy. I caught up with Ira Epstein from Lynn and Associates.
Let's expect the market to break off of this news, to be honest. It is the first reduction, if you will, in our credit in 12 years or so. We've been on watches, as you know, from S&P and some other services, so that's not a surprise. We're dysfunctional in America. Make no bones about it. That is going on. We're dysfunctional in many ways. It's Congress. It's an energy policy. It's where are we going with what we do. We're being pulled down by the Ukraine war. Don't forget that we are the biggest contributor. We're the largest NATO member in terms of money, and we give the most. And it's impacting what's going on in America. But here's the real key. It was an event today. Bull markets have events. What can I tell you? Nothing grows to the sky, but bull markets don't instantly turn to bear markets either. August is notorious for having setbacks in the market. If you take a look, I believe in 2020 and 2021 were up years, not big, but up years. But of course, that's pandemic time. Last year was a down year. And generally, this August should be a down month too, a churning month. And it certainly started that way. At the beginning of July, you had strong seasonal buys in the Dow and in the, I believe it was the S&P. And both, obviously, if you take a look at what they did from beginning to the end of the month, had very stellar times. What's been slow right now, believe it or not, is the NASDAQ. It had its big play from artificial intelligence. The market is pulling back. NVIDIA, the leader, it's down today $20 a share. So you're getting these pullbacks. But is this the end of the bull market? Oh, I don't think so at all. However, everything does have an end. And I would say, you got to start looking late in 2024 as to what this all might mean. But you're a long ways from there. And I am not one to join on to the bear crowd. You could have more of a correction in August, but that's how corrections work. They're called corrections for a reason.
All right, Ira, so you're looking at this then potentially as a healthy pullback. Of course, that comes ahead of more earnings results critically from Apple and Amazon in the next session.
Yeah, next 2 days, right? Yeah. But, we have to look at where we're at. Look at how many companies have beat. Did we not hear over and over from all the pundits that we would not see a good second quarter. I think that was the word that we heard. What's been happening, and nobody was paying attention in my daily videos that I put out, I have been telling traders regularly, are you paying attention to what the 5, 10, and 30-year bonds are doing? They are all in the futures markets dropping. It's an inversion market. As they drop, yields go up. And as those yields go up, something's happening. Well, the something that's happening, nobody keeps talking about it, is the Fed refunding. And we have to do $1 billion, $1 trillion. Billion seems like so much. $1 trillion over the quarter. And I think that weighed on the market along with the downgrade. And it was a confluence of all that coming together and an overbought market that finally today the plug was pulled. And you might get more of that. But did we really change the structure of American companies? Not in the least.
Yeah, in fact, further to that, Ira, we saw long-term US Treasury yields gaining, particularly in the wake of that private payrolls report.
Yeah, what a number, 375. So they come out 497. They take it down to what, 444. They come out today with a 350 or whatever the number was, double what the estimates were. And now we're going to have to see what the U.S. jobs reports and all look like. But we know this much. The market's looking for 200,000 jobs or thereabouts. It's looking for an unchanged number of 3.6% in unemployment. And by any standard, I don't care the standard one wants to throw at it, this is an economy at full employment. What's going to take it down? Long term, I'm nervous. How do you keep piling on debt? Is the Biden administration, before them, the Trump administration, with COVID and all that spending? Where do we cut back to get our house in order? That is when the market will peak out. I don't know the time. I know it has to happen. We're running this debt at a crazy number, and the higher interest rates go, that's going to weigh on the U.S. economy over time. Doesn't have to be today, but it is coming.
Ira, when you look at that broader picture and taking into account what Fitch had to say, their reasoning for that downgrade, pointing to political turmoil in the States, does that concern you longer term? We know what's just happened, of course, with Donald Trump, but he, of course, still the front runner to be the Republican nominee. Does that concern you heading into the next election?
Where do you go with either one? I mean, this becomes the real problem. Are we going to have a president in America that is ruling from a jail cell potentially somewhere? Maybe he pardons himself. I don't know how that all works. But you are right. We don't have good choices. The people that are running are getting no traction at all. There's absolutely in America, at this point at least, no appetite for the far right wing that Ron DeSantis brings to challenge Trump. And all the others are Iran, and that's about it. Nobody's giving them money. So this is where you end up. And I think that's a real problem in America as to where we're at. So we're going to hear Janet Yellen come out like she does because she's politicized. And she's going to say, oh, this was so misplaced. It wasn't misplaced, folks. America is not functioning. What are we going to do when we're supposed to come up with our next debt ceiling? All right. We're all worried about it, and we're not biting the bullet on anything. You can't keep going this way. And with an election around the corner, do you honestly think Biden's going to pull in anything? He won't. Did he accomplish anything and able to buy oil under $72 to $67, as he said in November? It was there a long time. He didn't buy any. And he just pulled buying of the 6 million barrels that they had put in auction tender in. Nobody's going to sell it at their tender price that they put out there. They're not going to do that. So the oil let go today. Does that change what the Saudis are doing and Russia is doing? No. Those countries want higher oil. All they have to do is keep it off the market. Why? If they keep it off the market and you have strong economies like around the world, your country, America, Europe, we're not talking of going into heavy recessions. Very light if they happen at all. I think that tells you the oil demand's going to stay strong. So corrections along the way like today, come on. They're normal. They're needed. They take the air out of the market. You'll have an opportunity down the road to pick up individual things you want to own.
Ira, how are you? Speaking of commodities, you wade into oil there. How do you view gold? That actually obviously bounced off the back of that Fitch decision, perhaps with concern about the future, but then sort of came back, I guess, off the back of that jobs number. How are you looking at gold at the moment?
Not friendly. And what I have been telling people is, how do you own gold when the big headwind is the strong dollar and higher interest rates? You have to get away from that scenario to let gold loose. Gold wants to run on core inflation staying sticky. You see it keeps sticking its head up over $2,000 an ounce, but it keeps getting thrown back because every time you turn your shoulder or your head left or right, what you see is interest rates in America rise, the dollar get a bid, and that's the kiss of death on the market. The bigger one was copper. Why did that even bother going up? Because Goldman Sachs said they liked it. They guessed that China would do something constructive. China is walking the dance around what they have to do, and they're not going to the dance floor. They keep saying things they're going to do, but they don't do anything, and copper doesn't belong up on that news, unfortunately.
Ira Epstein from Lynn and Associates in Chicago. That is the global view. Stay with us. The open is just moments away. We are expecting another leg lower today. Stay with us.